Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Thanks, Jack. We have a couple of other questions. One is from Andrew, and it's a two-part question. His first is, what's the next big event? Is it going to be, Portugal, Italy? I think you mentioned that maybe one day we wake up and Spain just says we're gone.
Spain's the one. Spain's the real problem. Greece obviously is a problem, but Spain, because of the size of the economy and the disruption politically, is really the one to watch at the moment. They're distant. Their unemployment's, in the mid 20% level. Their housing, they so overbuild housing. It's finally starting to roll in here. All the problems. So they're really the one to watch. Their debt to GDP ratios are as bad as Greece or worse. So that's the one. The spreads are starting to widen. And if we go back to this chart, the spreads are no matter what's been done, the downgrade from Moody's just the other day of Spain, you can see the spread between Spanish and term bonds are as highest as they've been since this started. This is today. So Spain is the one to watch here.
Interesting. And then Andrew, the second part of his question is, I guess I call it the battle of the gyms. This is me, and not he didn't say this, but Jim Rogers versus Jim Canos, as far as who do you think is right? Obviously, one is believing that the commodities are going to explode, and Canos is saying that China's economy was going to implode. I think I know which side of the fence of the battle of the gyms you're on, but if you wouldn't mind expanding on that.
Yeah, we tend to be on Canos' side of this fence. Two reasons. Number one, we do think the China housing problem, although on a relative basis, if you just look at the official numbers, you could say that it's not as bad as the U.S. was. They have more down payment. There's more demand, that type of thing. But if you look at the massive overbuilding on the commercial side of the fence, it's huge. And you look at all the games being played by the state-owned companies and just the locales, just the various governing provinces. There's a massive amount of bad loans sitting out there that would take a lot of cover from the Chinese government, and when they do that, it takes away consumption money, which they need. They need to grow their consumers because the export domestically are falling. We also think deflation is in the air. We think because of the continued massive write-down of private debt, and the euro is part of this, and we're still seeing in the U.S. the private deleveraging continues very, very swiftly. That's why all this fiscal stimulus by the governments is failing, and they're about out of bullets. This type of thing and this type of debt implosion that we could see in Europe is very, very deflationary for the global economy. And if you consider the fact that China has a massive overbuild in so many industries and massive amount of oversupply, that's a deflationary scenario because they're going to push those final goods prices down lower and lower. We don't see global pricing pressures. And as I said, fiscally, the governments are out of bullets. On a monetary side, it just doesn't seem to matter anymore because there's been a secular change in debt. So we see deflation and oversupply and lack of global demand leaning on China's side. But we say that with a caveat. You can never underestimate the ability of China to keep the music playing because the government does have the wherewithal. They pumped in basically half their economy, size of their economy, of stimulus into the economy, at the same time criticizing the West all along the way for too many fiscal stimulus programs, which is very, very fresh. So that's our view.
Very good point. Excellent point. Patrick has a question about Norwegian krona, and he says, wouldn't it end up better than the pound sterling, Jack? If you're thinking that the pound is going to do well, but Norwegian krona is going to be all right, or is oil going to, if oil heads back to 50 or 60, are they going to be suffering also?
I would have to agree that the krona is probably of the currencies in Europe would be the one to go to, even more so than the pound. Yeah, okay. I agree. I didn't talk about it because you guys don't have that option available.
Yes, that's right.
But right. I mean, their fiscal situation is much better shape, regardless of what oil does. Their central bank has been fairly aggressive here, taking some stimulus off of the table. So, on a relative basis, in current account surplus, better shape, we think, obviously. Agree.
Patrick has another question about Switzerland. He says that they're intervening often and they're trying to devalue their currency. What do you think there, Jack?
That's true. The Swiss central bank has made no bones about it. They don't tell you after they come in, but they've made it clear that they're coming in when they choose, and they have. And that's one of the reasons that's keeping the Swiss under pressure. Our view in Switzerland is really outside of the central bank's purview, in that if we see a contagion, we think we're going to see more and more bad loans come to the surface in Swiss banks that we think are going to surprise people. We may be wrong there, but we think the exposure to Eastern and Central Europe with Swiss banks is more than the market expects.
Good point. Andres has a question about how this is going to affect U.S. and I guess I'll just add a second part. Are there scenarios to be short here in the U.S.? Is it time to pull your money out of muni markets in certain states in the United States and assets that might actually tumble if we go through this deflationary whiff that you're talking about?
Well, I don't want to try and make that call for people, obviously, in those asset classes. But I do see a scenario, and somebody who has been kind of outlining this from a real broad stroke standpoint is Robert Prechter, and he's talked about this idea of deflation settling over because of the implosion of debt, and the real secular change. Not just a cyclical, and that's why, and we buy into the idea that this business cycle is not your father's or your grandfather's business cycle. It's a secular change in the global economy because of global rebalancing and the massive potential for deflationary pressures in here. And we've already seen the hits to financial institutions and the degree of credit risk we never ever expected, and that bodes to the idea, and states, every state in the U.S., some are a lot worse than others, obviously, are in trouble in terms of cash flows and falling tax revenues. So munis in general, I think you got to be, very, very careful for sure. And Prechter talks about it again, going back to him, you want to have stuff that is basically in cash. And it's kind of a dire view in here, but we see the outlines of it in here. We haven't seen the U.S. rebound, no matter how much fiscal stimulus they've put in, and this goes to the idea, which we think is a big mistake. I mean, going along this Keynesian economic playbook, which is a disaster. It doesn't create wealth. It just steals wealth from the private sector and then wastes it more. I mean, when they increase taxes from us in order to spend it other places more inefficiently during a recession, it's a disaster scenario. Plus the secular change in debt means that all the money that the governments are pumping out from the fiscal standpoint, there's no velocity. People aren't taking it and using it, so there's no pricing pressure because people are afraid. The jobs aren't there. And increasing taxes and regulation on entrepreneurs is the worst thing to do in a recession because they're the ones that create jobs. So we see that whole outline there from a policy standpoint and from the fact that the U.S. consumer hasn't reacted, even though we've seen a massive amount of Keynesian stimulus that textbook-wise should have brought us out of this months ago in a big way.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.